Did you know that your trading strategy could actually be a ticking time bomb? Even with a good win rate, there could be hidden risks in your strategy. You might think you are doing everything right, but I've seen it happen countless of times, and I've definitely learned this the hard way myself, that the pain of losing all your money through trading is something you want to avoid. That's why I'm going to show you a simple backtesting method. This process will help you to be able to discover those hidden risks before they actually destroy your capital. We'll break it down step by step so that you can start applying it today. Have you ever felt like your trading is like throwing darts blindfolded in the market? You are not alone. A lot of traders are doing the same thing and failing. But what if you could have clarity instead? I remember this one time I was convinced I had found the perfect strategy. It was based on small false breaks as the entry signal. That is, those little moments where the price seems to reverse, but then it snaps back. I had a few small wins at first, and which fueled my confidence. But then it all came crashing down. That feeling of failure and not knowing if your strategy actually works is a very common trap, and it is very painful to go through it. It is the frustration of seeing your hard-earned money disappear because you are essentially gambling. You are not trading with a proven edge. And that's the key here. Trading is not about finding some magic formula. It's about knowing with data that your strategy is likely to make money over time. Done right, this stops trading from being a guessing game and you move from hoping to knowing. And that is a huge mindset shift. But what happens when you don't have a proven trading strategy? What are the real consequences? Let's dive into that. The consequences are usually more than just the immediate financial hit. For me, it was not just the money that I lost. Although it stung a lot, it was the feeling of being completely out of control. I had spent hours staring at charts, second-guessing everything, feeling constant anxiety, and it was affecting my sleep, my work, and even my social life. My win rate looked okay. I was winning some trades. But because I had not backtested my strategy, I had no idea of the real risk. I was just one bad trade away from disaster. This is the danger when you don't have a proven edge. It is not just the financial losses. It is the long-term damage to your confidence and peace of mind. It is the difference between feeling in control and feeling like you are at the mercy of the market, whereby you start to question everything. And that doubt can be crippling. But hold on, there is a way to break free from this cycle. So how can you gain control of your trading? The answer is simpler than you might think. Let me use an analogy to help you understand this. Imagine you are driving blindfolded. You might have a map which here represents your strategy, but you have no idea if you are on the road that is heading towards a cliff or if you are even going in the right direction. That is what it's like to trade without backtesting. You would be driving blind. Backtesting is taking off that blindfold. It is looking at the road behind you to see where you have been and to understand how your car, that is your strategy, handles different conditions. It is about proving with data that your strategy has a positive expectancy, that it's likely to make you money, just like knowing the road ahead is safe based on where you have been. Here's the important part. Backtesting is not just about finding winning strategies. It is about avoiding the losing ones. And that's how you build lasting confidence, by minimizing risk and not chasing unrealistic returns. So how can you know if your strategy is any good after backtesting? Let's break it down. Number one, pick one trading strategy and define your strategy's rules clearly. That is, your entry criteria, your exit criteria, your risk management, everything. Be as specific as possible and write it all down. Number two, test your strategy over the last 4 years of market data. This will give you a good sample size, and within those 4 years, aim for at least 30 trades per market that you are testing. For example, if you trade stocks, that's 30 trades on each stock you trade. This will ensure that you are not just getting lucky in your trading. Number three, determine your profit factor. That is, what are your total gross profits divided by your gross losses. A profit factor above 1 means you are making more money than you are losing. But for a strong strategy, we want to see a profit factor that is greater than 1.4. That will give you a good cushion and suggest that you actually have found a real profitable trading strategy. Then rinse and repeat this process until you have a handful of proven profitable strategies. I mentioned earlier the feeling of being lost and how painful it is when you don't know if your trading strategy works. There was a turning point for me when I understood the key changes that I needed to go from being a losing trader to making profits. So check out this video where I share my personal journey, the mistakes I was making, and the steps I took to become profitable, so that you can learn from my experience.